Welcome to another episode of Poor vs. Standard. Poor here. How we all doing? As always, this is not financial advice. Any opinions within this podcast are for entertainment purposes only. Please don't sue us. Don't do it. Hell of a week, ladies and gentlemen. Hell of a week. We are going to go over a few things as far as the housing market crash that may be incoming shortly. And the different things about that. We're going to go over the fact that it's a massive earnings week with a lot of blue chip stocks. An IPO that's happening this week, and what happened on Monday. So stick around and let's get into it. So we have a bunch of things going on this week that are going to be interesting. Almost every single blue chip company is going to be reporting this week. You're going to find Apple, Microsoft, just every major company you can find that's worth like $1 trillion is going to be reporting this week. And that's not even all of them. That's just like, one a day. There's hundreds of companies that are going to be reporting this week, and at least like 3 or 4 each day that I'm excited about. So with that, you're going to see a lot of fluctuations in the market, I'm sure, as most people are excited about these earnings reports. And if you noticed on Monday, we had like a 700-point drop in the Dow, and markets were very red, very, very red on Monday. And we spent literally all week jumping back up to where we started. And most everything but the Russell closed at new highs. But it wasn't the same breakdown of stocks that were closing. It was the larger blue chip stocks that jumped up versus the tech sectors and things that crashed down. So growth got hit. So this is why a lot of people preach diversity, is because if you'd had, the Apples, the Microsofts, the FANG stocks, your portfolio probably didn't look like it bled as badly. But you also, have growth stocks for a reason. So 6 of one, half dozen of the other, right? But they're blaming Monday's massive drop on the fact that there's all these new variants of the COVID coming out, breaking through. And while it's, a thing that is happening, it's a thing that's been happening, and I don't believe it was all of a sudden one day, oh, great, we're going to get lockdowns again because there's a new Delta variant of the COVID. No, that's a stupid-ass reason for a market crash on one day. It would have been a slow, pulled-out drag out as it gets worse and worse. It's not, and it's not even that it's getting worse. The difference between this latest spike in cases and the previous spikes in cases is the death rate, which is the important number, because not as many people are dying from COVID anymore. You're actually less than the flu at this point, which is great, and that's fantastic. So don't be fooled when people say, oh God, we're going to get shut down because there's another spike in cases. The case number doesn't matter. It's the death count that matters. And right now, the death count is very minimal. So just keep that in mind when you hear all this panic and fear, literal fear of a brand new wave. Just bear in mind what the death count is versus what it used to be. And with that, rant over on that. So, there is a new stock that's going to IPO this week, and it is Robinhood IPOing for a $30 billion valuation. And one analyst says Robinhood's worth maybe $9 billion. And I honestly wouldn't touch Robinhood with a 10-foot pole. I wouldn't touch Robinhood with your money. They've burned their base bad repeatedly, and there's a record number of retail traders hopping on board last year, and already they burned almost all of them at least once with their outages and their, GameStop, AMC, ticker volatility stuff. And the more and more that comes out, the less and less I ever want to have a piece of that ever. So just if you want to get on Robinhood's IPO, that's your prerogative. This is not financial advice. Just I'm telling you that I will not be touching anything Robinhood related probably ever. So I'm not saying that they don't have a platform that's basic and easy to use for new users. So onboarding is a lot better there than it is at some places, but it's after you've been onboarded and you get your feet wet and you understand trading a little bit better, absolutely no reason to stay there. Yeah. So the main reason, the bread and butter of this episode I wanted to get into was the housing market and what's going on with that. So right now, you'll notice that housing prices are at all-time highs all across the U.S. Everywhere you go, people are selling houses and they're sold within like 30 to 45 days, which is super fast turnaround for houses. And they're up like 18% month over month. It's massive amount of upside. I mean, we just got a letter from the town I live in saying that they're upping our assessment by 6%. And I was like, that doesn't seem right, but okay, whatever. Can't fight the government because the government wins every time. But yeah, so I mean, it's incredible. It would seem as if there is a massive, fire in the market to have everyone buy houses. Yes and no. There is a fire. The housing market is on fire and prices are rising steadily. People are, trying to buy houses, and there are cash buyers who are absolutely buying houses at these inflated prices. There are large money corporations that are buying houses at these inflated prices. But your average Joe, me and you, trying to buy a house, we're being hindered. And it's a little bit complicated to get into, but if you look back at the 2008 housing crash, leading up to it, there was a footloose, fancy-free method of anyone who wanted a loan for a house got a loan. After that, they started restricting it. You had to have top-notch credit. You had to have job security. You had to have credit scores out the wazoo, like real high, like 750 and plus, and it's a thing. So the banks have been telegraphing this punch for at least a couple of weeks now, where we saw that, was it JP Morgan or Chase, was stopping all personal lines of credit. That's a scary thing. And yeah, banks are harping down and they're making it more difficult now to borrow money. They don't want to give you the money to buy a house because they're not making enough on the interest because interest rates are so low. And they're also worried that these prices have shot up and they're expecting a crash. They're expecting a downturn. And so they're only willing to sell to people with the highest credit rates because they figure that the people with the most stability and the high credit rates, even if the price of their house does dip, they're still going to be able to pay. People with like a lot of cash on hand. I mean, the things that banks are doing now versus what they would have been doing if, it was a footloose, fancy-free kind of thing. They want you to have more cash on hand. They want to have higher down payments. They want to have higher credit ratings. They want to all these things. And, the they are also probably limiting the amount you can get in these loans just because they don't want to be stuck on the hook, which, because of a mortgage moratorium that's been going on for about 16 months now, the current not mortgage moratorium, but the foreclosure moratorium was, before COVID, it was 400,000 loans that were basically in default, like high levels of default. They were basically going to be foreclosed on. Currently, it's 4 times that. It's over 16, or it's 1.6 million, excuse me. Over 1.6 million. So They have a 4 times in 1 year. A 4x gain on that is not good. And banks want to limit their, liabilities and stuff, because when a house goes from in good standing to a foreclosure or in high default rates, the bank has to have more money on hand. It goes into an entirely different bucket for the bank, and so that eats away at their profits. Now, this is something that will continue to happen as long as there is a moratorium on foreclosures. So banks are just sitting there eating all this money on people who aren't paying. And when they have to finally pay, or when this moratorium gets, lifted, all these people are going to get ousted. And banks are going to take back those properties. And they're going to try and sell. And the people who have been, house flippers and stuff, who that's their name of their game is profit. They buy these houses at cheap prices, and they've been buying them at inflated prices and trying to flip them. Everyone's going to hit the market and be like, whoa, we can't make this project work anymore. We are going to have to sell in order to just recoup some money so that we can stay afloat. And so you're going to see a massive downtrend in the markets, more than likely, probably within 6 to 12 months. And that is because all these regulations that were in place for far too long, and there's no real exit strategy. Landlords and everything who can't evict people are just sitting there like with a dead property and paying taxes on it, because there was no moratorium on collecting taxes for those properties that they're not allowed to rent out to new people who would actually pay them. What do you do? What do you do? And I understand that is not a popular opinion with a lot of people. However, this is a financial strategies podcast. It's not financial advice, but this is a current event, and this is something that is going to be happening. And if like it or not, you don't have to like it. You don't have to like everything I say. I don't care. But this is a thing that's happening. People are going to be removed from their houses forcefully once this is over. The policy, there's no good removal policy right now. There is no way for people to evict tenants, bum tenants, squatters basically at this point. There's no good way for that to happen. And once they remove it, those people are going to be evicted. And this eviction moratorium went way too long, because there's a difference between deferring a loan and basically putting it on hiatus. And in one of these things, you're going to have a lot of these people who put their mortgages on like hold, basically. They were allowed to do that. However, they will have to have all of the money that they didn't pay in one lump sum. Whereas like a deferment kind of kicks the can down the road, but a forbearance is different than that. The forbearance, the deferment, you kick the can down the road. The forbearance, I believe, is the one where you basically, okay, fine, you don't have to pay right now. Once you get your shit together and you have the money, then we expect you to pay. So basically, this forbearance that the government said everyone could have on their mortgage, the people who took that up and didn't understand it completely, they're going to have all those missed mortgage payments in one lump sum. And that's not good. So you will probably see a spike in basically defaulted mortgages, and a lot of short sales are probably going to happen real quick. So there's going to be a massive dip in property buying prices. And if anyone has dry powder or needs a home, wait 6 to 12 months, because there will be a lot of them at deep discounts coming on the market from people who basically can't afford their massive mortgages that they let balloon up, or because they didn't pay and now they're being evicted, because you gotta pay for where you eat. There's no such thing as a free lunch, and you're gonna get, you're eventually, it's gonna catch up to you if you didn't pay. There's no way around that. There's, only two certainties in life, and that's death and taxes. And a mortgage is basically bank's way of taxing you to make sure that they get paid for you living where you are. All right, that's what I got for you there. We'll go over the portfolio a little bit and discuss options play because that seems like a thing we should do. Yeah. So we went down to like 20,000 on Monday. This has not been a good couple of weeks. No, but we started to recover a little bit, so we're currently up around 23,300. Um, some of the plays that we have are actually longer term, like this Walgreen play. We bought two of them, but they're for 2023. We got some Palantir options that are out there, I believe. Yeah, 2023. Um, this Taiwanese semiconductor play is also a 2023 one, and we are underwater on it, pretty decently, which sucks. But we got till 2023, so we're fine. I did buy 10 shares of Arcimoto this last week. You can see that my, cost basis was $15.45. I saw that it was shorted 45% of its float. And I thought that was a nice little thing that might happen into a squeeze play, but again, not a high conviction, so I just figured I'd buy it to watch it a little bit. And then I do like this stock. I liked it a lot better when it was under 50. Anytime this dips under 50, I will buy. I did buy one share just to watch it. Doximity, I believe is the name of the company. Where is it? Yeah, Doximity. Great company. Definitely do your DD on it. I might actually do a DD video on it. Coinbase, once it gets up to that 242, and actually we're going to talk about this too. This will probably open up a lot higher than it is because Bitcoin is currently on a massive tear. Like if we go to, maybe if it loads, I looked at Bitcoin and yeah, look at that, almost 39, 38.5 almost. Huge upswing recently. It did pass 39 here a couple hours ago. Ethereum at 2,300 and Cardano at 133. I mean, I bought a boatload of this when it was at 104. I actually don't have it in Coinbase. I move it to my Yorio wallet just to, stake it so I can get more. I've gotten over 30 Cardano free now. It's pretty exciting. But this is a great one. It's probably going to do very well in the next 5 years as well. Dogecoin over 20 cents. Excellent. Good for you, Elon. But yeah, no, there's a massive buying on cryptos right now. The fear is leaving. It could be because of, inflationary data coming out and that kind of thing. I don't know. I'm not sure. I have not looked at any news for crypto today. That's on me. I apologize. So, honestly, some option plays that you might look at for the week upcoming would be something in the crypto space, like Voyager. Actually, I might look at that too. That's not it. There we go. Voyager Digital. This will probably open way higher. It's an options play that you could probably get it if there's no options on it. So you probably have to do a Coinbase option, which is fine. It's just a matter on whether or not they're lucrative enough, or if the IV is too high. So I do have a couple things working based on some of the things I've been reading or watched. Cleveland Cliffs, excuse me, has been beat down like a bloody dog, and this is something that I would like to buy and own for at least a year or so. I think it'll do very well. The Walrus actually just released his DD today, and Walrus Street YouTube video. Check it out. He does amazing work. I can't recommend him enough. And I literally took his advice on this one and the options play here. Yeah. Valero's his option of the week, and it looked really good to me. So I put a buy order in for one, just to see. We'll see where we go. And yeah, honestly, I'm thinking I might do an options play on Arcimoto, just because it too might pop, and August is still 26 days out. Might be worth short little swing for the fences kind of thing. We'll see, but I will post those on the Twitters when they happen. So with that, that's portfolio update. That's the crypto update. And yeah, I can't thank you folks enough for sticking with us. Appreciate it. And as always, trade well, good luck, and be safe.